joins us this week with good policies with Barrett Insurance Agency. Mike, what do you think of the sunshine?
Loving it.
Huh?
Loving it.
2 weeks ago, you were skating across the parking lot.
Yeah, and tomorrow I get to ski across parking lots. So,
Oh, man. Winter storm warning, folks. Going to go into effect tomorrow afternoon, run through Thursday. But let's not talk about that. We
No.
talk insurance, whether it's personal,
because that's more
professional.
exciting.
Well, it is. It is. You and I were just talking about this here. And there are things out there that are contracted, okay? We talk about satellite service. We talk about cell phone service. We talk about internet. We talk about all of these things, and things change over the course of time.
Yeah.
Which is why you come in and talk with us about good insurance policies. Our subject today is,
Switching insurance.
see how that worked
The
out.
good, the bad,
and the
the
not
ugly.
so. Oh, okay.
well, you have to do the whole thing. Even if it's not necessarily ugly, it's kind of ugly. So, it's a very common thing. And with all the advertisement, the mass saturation in the media of all the commercials for insurance, it's easy to look at insurance differently than what it really is. Insurance is not a commodity. Insurance is a protection for you. A commodity would be something like a television,
Okay.
a vehicle, things that you consume that you are always getting new and improved.
All right, makes sense.
Insurance changes. Insurance gets better with time, hopefully. Not
Well,
always.
we've learned that, though.
Yeah. And what I find with all the advertisements out there, and even including this conversation, many people start thinking about insurance and going, well, maybe I should switch. When you switch insurance, you're starting a new relationship. All right. So, and that's the one thing I thought would be a good point. If you're one that goes, you know what, if I can save 25, 35, 50 bucks a year, and I'm just going to switch all the time, you're saving money, yes, but you're not keeping a relationship. So that can eventually become a problem for you. And how so? Well, let's talk about a loss. All right. So you've switched to a new insurance company, and within the first couple of months of having that insurance, now you've suffered a loss. Let's use automobile insurance as an example, because that's the one that sees the most changing.
I was going to say that is the most common.
It's the most common as well. So let's say that you just jump, and then all of a sudden you have a loss. So you have a loss within the first 6 months of having a new policy with a new company. That's going to be looked at a lot differently than if you had that same loss with a company that you've been with for a few years.
Can I ask you a question?
Sure.
How often do people switch once a year? How often do people do that? I mean, is it that common?
It's pretty common. There are two types of consumers out there in the insurance industry. Some that say, you know what, once I find a company that I'm comfortable with, I'm going to stay with them. And I'm going to stay with them not for forever, but I'm going to stay with them for a while because I've done my due diligence. I feel comfortable in the process. I like what I'm doing. I like what they do. And then there are others who are always looking for a little bit cheaper, And it's not a bad thing. I recommend it to a point. But, if you have an accident with a company that you've been insured with for a few years, there's going to be some level of accident forgiveness there. Some companies even offer a deductible that starts to diminish over time. So for every year that you've gone accident-free, that maybe you chose a $500 deductible, every year that deductible reduces by $100. So less out-of-pocket expense possible if you have an accident. Probably no surcharging whatsoever if you have an accident because you've been with them for a period of time and you've built up what they call a history. So they have a history on you, and it's just it can bode better. I'm not saying don't ever switch insurance. That's far from the point, but I want that to be something that people think about going, well, if I'm not saving more than just $100 or so, maybe I shouldn't switch because I have this relationship. Is it worth losing that relationship for $100 savings? Maybe, maybe not.
Well, maybe somebody out there has the same question popping in their head as just came into mind because that's the way I try to look at these things, right? So these things like you hear of first accident forgiveness,
Yep.
and like you said, diminishing deductibles and so on and
Yes.
so forth.
Yeah.
These are not then just advertising to keep you with them, right?
Right.
Okay.
Yeah.
So
So it's an important thing to just do your due diligence to check it out. Now, that being said, there are times when making a switch is absolutely the smartest thing to do.
Well, of course.
And I'm going to give an example. Back in 2009, my wife and I bought our house. And we were insured with one carrier, and I'd been with that carrier for 9 years. Loved being with that carrier. I thought my rates were untouchable. And then we bought our house, and my wife looked at me, and we're insurance people, but we're also consumers of insurance.
well, of course.
So we're on both sides. So, which begs the question, who do I complain to when my premium goes up? Myself.
You don't.
Makes for an interesting conversation.
You shop, right? You
Right.
shop.
But my wife said, hey, let me just shop and take a look and see what the options are. I said, all right, fine, if you want to. But I'm staying with who I'm with because I love them. And she came back and said, well, how much do you love them? I said, a lot. She goes, $400 a lot? Is that a lot? I said, is that savings? She goes, yeah. I said, I don't love them that much. Let's win. So, but there have been times where we've saved people a significant amount of money. I can actually tell you that at least a half a dozen times or more in the past couple of years, I've saved people almost thousands of dollars by switching insurance. So yes, there is a time where it's worth looking. But what I'm saying is leverage what you lose to what you gain. So if you're saving a little money, but you're losing some deductible diminishing benefits or experience benefits, maybe reconsider.
What is the suggested time frame? I mean, you mentioned a year, you mentioned 2 years. What is it? I mean, obviously, at the end of a year, you might want to look around, or should you, as you did, go a couple, 3, 4 years?
Go 3 years.
Okay.
2 to 3 years is fine because there's not always that much. And I'll tell you, there's always going to be a company that's cheaper. That's always going to be the case. But how much cheaper is always going to be the difference.
And then from our talk last week, is it really cheaper? Yes, the dollars and cents monthly or annually is, but is the coverage the same?
And that's the big thing. The coverage is typically the most overlooked part of the policy. And I'll tell you, if you're saving a couple $100, that's great. But if you're losing any of the coverage that you had, how much of that coverage that you had before did you really want? If you're going with lower liabilities or state minimum liabilities or even losing medical payments coverage at all, there's a lot of risk there. So that's why it's good to have that dialogue and do a true comparison and see if it's really worth making the switch.
Well, life happens too, and there may be somebody out there that might have to do that, lower their coverages, keep their fingers crossed nothing happens for a year. Maybe they've had a job switch or something like that.
Yeah.
But as we always say when we get together and we talk good policies, have the conversation, make the connection with the people.
Absolutely. The information that you get through the process is the most important part. So if you're saving money in the end, if that's the end result, that is the cherry on top for sure. But just be careful about it, because the last thing you want is to save a couple $100, have a loss, and then find out that what you have versus what you had is not the same, not enough, and now negatively impacting you, which it can happen, and it does happen.
Apples for apples, cherries for cherries, right?
Exactly.
All right. Tell folks how to get in touch.
Sure, you can give us a call, 748-5224. Visit our website, thebarrettagency.com. We're on Google, Facebook, and YouTube as Barrett Insurance Agency. Full disclosure, I am out of the office for the next 2 days. I'm going to town meeting today, and then I'm going to a class tomorrow, because that's what happens when the snow comes, is I have to go out of town on the road. But the office is fully staffed. Kim, well, not fully, I'm not there, but Kim, Anita, and Jen are there and fully able to take on whatever comes in and can help you out. So.
Well, and you taking the trips to go get yourself educated, educates the consumer. We share it here on the air. It's well worth the time out of the office.
We hope.
All right. Good policies with Mike Barrett from Barrett Insurance Agency on Magic in the Morning. You have a great sunny day.